Hello and welcome. You're tuned into Your Trades on ET Now. I'm Shrishti Sharma and with me is Snehi. And Snehi, what a fall is what we have witnessed on the markets today. That was just the expiry play, because there was no major news flow except that FPI disclosure norms were there, but they were not that concerning. But nevertheless, we have seen more than 1% fall in both the benchmark indices. For Nifty, we have broken below that support level of 22,000, and for the Bank Nifty as well, more than 600 point cuts is what we have witnessed, and all the major banks from the likes of SBI, HDFC, nobody was seen to be participating in today's trading session. But Snehi, indeed, the breadth of the market was clearly in the favor of the declines, but a lot of stock-specific action today.
Well, absolutely, Srishti. Stock-specific action today, and the markets were bleeding, like you said. So let's take a look at the other top newsmakers that we have today, and that's Hinduja Group to delist Reliance Capital from bosses. That's the word that we were getting in today. Now, remember, this delisting process has been underway for quite some time now, and on the back of that, Reliance Capital is going to be delisted from stock exchanges as per Hinduja's resolution plan. It's going to be a complete delisting, so the entire existing share capital is going to be cancelled without any compensation. So it's going to be extinguished without any compensation, and this is as per Hinduja's original plan. Moving on, let's talk about another stock that was, not a buzz in the best sense when it comes to today's trading session, and that was Vodafone Idea. It was down 10% in the day today after the board passed a resolution to raise 45,000 crore rupees via a mix of equity and debt. So the street did not take the debt segment of it too well, and the stock was down 10% on the back of this news flow. Bajaj Auto, another counter in focus today, that has set tomorrow as the buyback record date, Feb 29, which means tomorrow is going to be the last day to be eligible to buy the shares for Bajaj Auto to be eligible for this buyback. Another newsmaker today in trade was Vedanta, because they have gone ahead and they say that they've aimed to reduce the debt by $3 billion in the next 3 years. So that was a positive news flow coming in for Vedanta today. And when we talk about Vedanta's stock performance, did not manage to hold on to the green despite this positive news flow, down 0.3%. But yes, this was all the important news flow that we had today. But to discuss what the market did today and how tomorrow looks like, what can we expect the markets to shape up like tomorrow, we're now being joined by our guest on the show today, Ruchit Jain, the lead researcher at 5paisa.com. Hi Ruchit, thanks so much for taking the time out and joining us today. Help us understand this, right? Because for the last 2-3 sessions we've been seeing this. Nifty starts on a solid foot. It looks good when it starts. It's in the green for quite some part of the day, and then suddenly you have this one point where everything goes downhill and the Nifty breaks a certain level, and today it has managed to break that 22,000 level as well. Help us understand what is this correction that we're seeing on a much regular basis compared to earlier. What happened to Nifty today? And broader markets have also slipped further than the benchmarks today. So how is tomorrow's trade day shaping up for you? What are your views?
Hi, very good afternoon. Well, if you look at positional data, then we had a one-way up move till the mid of January when Nifty made that high of around 22,124 mark. But since the mid of January, our markets have entered into some consolidation phase, which seems to be a time-wise correction, where we have we have registered a new high on the index, but there has not been any kind of follow-up move seen. Secondly, there are some divergences seen where the recent new high in the Nifty index has not been confirmed by the new high in the mid-cap index, and also the RSI in the mid-cap index has shown us some negative divergences. So usually whenever we see such a long consolidation of 1.5 months, RSI starts forming negative divergences. These are some signs of some kind of distribution patterns where a short-term correction within an uptrend should be expected. So what we are witnessing today in the mid cap and the small cap space, I think it's the start of a corrective phase which could still continue for next maybe 2 or 3 weeks time frame. Although this would not change the longer term trend for the markets, but we have seen a one-way run up in last few months. So I think that correction or the retracement of the up move could be seen. Now, if you look at the options data, now if you talk about next 1 or 2 trading sessions, tomorrow being an expiry, today at the start of the day, highest put writing was at 22,000 mark, and call writing highest was at 22,200 and 300 mark. So as the day progressed, we witnessed consistent addition in the call options, where 22,200 became an option with highest OI. then even 22,100 started witnessing good amount of open interest addition. And during the end of the day, when we breached the 22,000 mark, the put writers, some of the put writers had to cover their positions. So I think this covering of the positions by put writing and addition of call options, addition in call option clearly indicates that expiry may not be that bullish or positive, and any kind of pullback moves if we get intraday tomorrow, then that could be sold into. So from a very short term perspective, we are a bit cautious in the markets. There could be some corrective phases, within an uptrend. But yes, these are not long term trend changes, but short term traders need to be cautious here.
Hear from Rajat, and Rajat, you did say that you were seeing this as a start of a correction that could last over a couple of days. So amid a market setup like this, what are the stocks that you are picking out for for our viewers? I believe sell calls all across.
Yes, I think no, from a momentum perspective, there will be sell calls no, in such markets. And first sell is in PVR. So already an underperformer, right? So we are looking at such stocks where the stocks have not participated in the recent up move and has shown underperformance, so that when the corrective phases goes, these underperformances tend to go lower from current levels as well. So PVR is one stock which has shown a good underperformance. The pullback move have not seen the stock surpass its even 20 days exponential moving average. So one can look for shorting opportunities over here with stop loss above 1400, expecting targets around 1300. And IndusInd Bank is another candidate where one can look for shorting opportunity, but here there is one conditional call to go short only below 1430. So because last two times the stock has formed a support around 1430, which is a consolidation, but ideally the pullback moves should have indicated some sort of bottom formation around 1430, which has not happened. So no strength in the pullback moves, and if this 1430 gets break, then I think one can expect a decent unwinding of long positions here along with the short formation. So go short in IndusInd Bank below 1430 with the stop loss then above 1470, and expect targets around 1400 first, then 1380.
With this, we'll let you go on that. Thank you so much for joining us today on ET Now. But with this, viewers, let's move on and let's highlight today's breakout and breakdown stocks. Firstly, let's have a look at the breakdown stocks, because on the charts, if you will see, HPCL has come out. Why so? Because definitely this was one of the darlings of the stocks indeed. But if we see the movement in the HPCL, then every time it was seen to be respecting its 20-day moving average. But in today's trading session, we have seen a fall of almost a 4% in HPCL. It managed to break below its 20-day moving average. There was shorts in the system on the derivative side, and the rejection exactly came from its 20-day moving average as well. So this is the first stock that we wish to highlight on the breakdown side. But moving on to the next counter, then obviously it was a sea of red when we come to the stock specific action. But HUL was one such stock where we witnessed that the pulse was still alive. And on the charts, what we witnessed is that the stock managed to break out after a falling trendline channel. It moved above its 20-day moving average as well. And on the derivative side, there were some mild longs that were getting added into the system. So this is one such stock that we have wished to highlight on the breakout side. Snehi, back to you.
Well, all right, Shrishti, thanks for taking us through that. HPCL and HUL is what Shrishti is spotting on the charts. But with that, it's time to slip into the word from the wise segment. And today, that happens to be Ajay Srivastav, the CEO at Dimensions Corporate Finance Services. And he has already invested in PSU companies. He believes that power, OMC, power finance sectors will see more traction in PSUs even going ahead. So listen in to his view.
My guess is that these sectors will have just seen the first run-up after almost 2 decades. We have seen PSUs not performing for 2 decades or maybe more. So I think this is the first leg, and people have got really said, it's the new high. But I think it will go higher. I think PSUs will get more traction, certainly in the 5 sectors we have spoken about just now, because simply there is none which exist and there is no competition. And anybody from overseas wants to come into India in these 5 sectors has to go to the PSUs. So my guess is that these 5-6 sectors, including say power finance, that's a unique niche in this country, which again with the PSUs, you can't go anywhere else, PSUs. So you can pick and choose. You want to ignore the sectors? Sure. You want to be in the sectors? PSU is your game. And I think they will give a much better return because for one reason, the dividend policy is not specified. So with the dividend yield, these become very attractive buys. Overall, it looks positive. And with the new government coming in, I guess is that there will be more divestments and more accountability. Boards will get professionalized. So it's in a good wicket to be at least in the 5 sectors.
Okay, so that's the way coming in from Ajay Srivastava. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back with more news and updates.
Hello and welcome, and thanks so much for staying tuned to your trades. You're watching ET now. Now, Bajaj Auto was a stock in focus today, down 3.5% in today's trading session. Now, Bajaj Auto has announced a 4,000 crore rupee buyback program, and the record date for that is tomorrow, which is 29th of February. So, my colleague Somit is joining in with all the details on this buyback. Hi, Somit, take it away.
Well, for Bajaj Auto, if you see, the stock would remain in focus because tomorrow is the record date for the buyback, which means that today, Feb 28th, will be the last day to buy shares for any shareholder who wants to participate in this buyback. Now, the buyback price was at around 10,000 rupees per share was set, and compared to current market price, if you see, it is at a premium of nearly 18%. However, the buyback size is small at around 4,000 crore, which means that the company will be buying back only 40 lakh shares, which means that only 6 lakh shares have been reserved for retail shareholders. Now, given the smaller size of buyback and higher retail shares in the system, the acceptance ratio is expected to be lower for Bajaj Auto buyback. Now, given the fact that the acceptance ratio is expected to be lower, the gains would also be lower for any retail shareholders who's looking to buy the Bajaj Auto shares just for this buyback play. Now, analysts are expecting the acceptance ratio to be anywhere between 14 to 17%. Now, we have given you a scenario here. Now, in case there is a 10% acceptance ratio, then the actual gains for any investor would be just 1.8%. In case of 20% acceptance ratio, the gains could be around 3.6%, and if the acceptance ratio is higher on the 30 to 50% side, then the gains could be around 5.5 to 9.1% for any retail shareholder who is looking to participate in this buyback and is looking to buy shares today for the same.
Well, thank you so much for that, Somit. But please hang on. We'll try to. We want to discuss Vodafone Idea as well with you, because Vodafone Idea gets the board not for a fundraise of 45,000 crores, though the equity and the debt is something that it will have a mix on. But the company will hold an EGM as well to get the shareholders' approval. Somit, tell us more. What's happening with Vodafone Idea in today's trading session? The stock did see a sharp knock of 14%.
Well, the recent announcements that have come in Vodafone Idea is the fact that the company is looking for an equity fundraise of close to 20,000 crore rupees, and also they're engaged with multiple banks for a tie-up for debt funding also. Now, overall, they are looking to raise close to 45,000 crore rupees via equity and debt going forward, and they will be holding a EGM, that is the extraordinary general meeting of the shareholders, for the approval of this on April 2nd, 2024. Now, promoters would also participate in this proposed fundraise as they had committed earlier, and these funds would be used by the company for significant expansion of 4G, 5G network rollout and for capacity expansion going forward. Now, what does this fundraise mean? In practical terms, this fundraise actually means nothing, because the company is just enabling a resolution to raise these funds, as they had done there earlier also. In September 2020, they had enabled a resolution of around 25,000 crore rupees. In March 2022, they have enabled a resolution of close to 10,000 crore rupees. However, the company has so far failed to raise funds from any external investor so far, and this is just an extension of the earlier enabled resolution, and this time the resolution is for 20,000 crore rupees of equity fundraise, and an actual fundraise could be still some time away for Vodafone Idea going forward. Now, why the fundraise could be a challenge for Vodafone Idea? Because if you see the current market price of the share prices are currently 15.9 rupees, while the government was issued shares at a face value of 10 rupees per share. Now, in case a company even goes ahead with a QIP and preferential allotment, the pricing of this allotment would be determined on a predetermined formula, hence which could be higher than the face value, and this could discourage any potential investor who's looking to put in funds in the company. Hence, most likely a fundraise could be challenging for the company going forward. The company could, however, could decide to go ahead with a rights issue, because at that time the company could keep the pricing as per their terms, and that could be near to the face value. So, rights issue could be the only way ahead going forward for Vodafone Idea for a fundraise. Apart from that, fundraise still looks challenging for the company.
Alright, Swami, thanks so much for taking us with everything that was happening with Vodafone. Let's shift focus from Vodafone. Let's talk about Vedanta, because Vedanta held its analyst meet and that stock ended the day with a downtick of 0.3%. So what are the company's targets and capex plans, and what will be the next growth driver for the company? My colleague Gaurav is joining in with all the key takeaways from this meet. Gaurav, hi.
So let's talk about Vedanta's annual meet, and first let's talk about the debt plans that the company has presented. So basically, Vedanta parent company has said that they will reduce the Vedanta Resources debt almost by 3 billions in the next 3 years, and they will make sure that they won't compromise on the well-being of the listed entity, which is Vedanta. If we talk about the capex plan, the company now has 6 billion worth of capex plan, and the payback period for this capex plan is less than 3 years according to the management. Lastly, if we talk about the growth drivers, now company has a vision to triple their revenue and EBITDA from here on, and they also aim to achieve the debt neutrality by 2030. They believe that aluminium is going to be the next growth driver for the company, and they are aiming to be the lowest cost producer for aluminium. And lastly, they are also going to announce 2 million ton worth of zinc project in India very soon. So all in all, very positive commentary has come up from the Vedanta management. If you look at the stock price, it has been in a consolidated zone for at least for the last 1 month. So let's see how the stock performs now that we have a positive commentary from the management.
So much, Gaurav, for getting us all those details. But moving on, and Indrajit Mukherjee, Vice Chairman at Technical Rail and Engineering, says that one of their freight business is in good shape, and also added that they are planning on getting into the Vande Bharat space too. Let's go across and listen into him.
Lot of the wagon orders are coming in place, but last but not the least, the implementation ratio is very high. It's actually, I can't really go by a number, but it would be, I would reckon it will be in the range of 80%. That's the amount of utilization that has been done on the capital outlay. We are not making Vande Bharat train at this moment, but we very much aspire to do that very soon. And there would be a lot of export opportunities to not only to the Asian countries, but also to the Middle East, and of course to Africa, where we are a very primary exporter of freight cars. So we are looking at the opportunities how to build up our capabilities towards making the Vande Bharat. So a lot of work is going on right now.
Well, that's the word coming in from the management of Texmaco Rail, but we did speak about a whole lot of stocks on this show today, the likes of Vodafone Idea and Bajaj Auto. But Gaurav is joining in once again with a list of all the other stocks that were newsmakers in today's trading session. Gaurav, hi, thanks for staying on. Take us through the list.
Yes. So first let's talk about the stocks which were trading in green today. And the first one is Dreamfolks, because Motilal Oswal initiated buy rating and a target price of 650 rupees per share. They believe that with increasing air traffic and card usages, the lounge usage is also going to increase, and with business, asset-light business and international segment, they can actually achieve sustainable profitability from here on, and that is why this bullish view was coming on Dreamfolks from Motilal Oswal. And we also saw the stock was up almost by 5% in today's trade. Let's also talk about Max Financials, because Jefferies now, while maintaining buy rating, increased the target price to 1200 rupees per share, because they believe that ramp up in agencies and collaboration with Axis Bank is likely to support the growth for the business, and that is why we saw the stock was trading in positive today. Let's also talk about GE T&D in India, because this company secured an order worth 370 crores from Power Grid Corporation for the supply of 765 kilowatt of various transmission system projects, and that is why we saw this stock was also up in trade today. Lastly, apart from that, let's also talk about the stocks which were in negative today. So the first one is Paytm, because UBS basically cut down the target price from 650 rupees to 510 rupees level, because they believe that in Q4 we may see a huge impact of RBI's regulations, and that is why we saw the stock also reacted negatively and was down almost 5% today. And lastly, we also have Patanjali Foods, because we saw that Supreme Court has now imposed a complete ban on Patanjali's advertisement for false and misleading advertisement, and that is why we saw this stock also reacted negatively in today's trade. So from tomorrow's day also, let's keep an eye on all these stocks and see how they trade.
So much, Gaurav, for taking us through that list. But with this, viewers, it's time to wrap this edition of Your Trades. It's a goodbye from me and Snehi and the entire team who put the show together. Thanks so much for tuning in.